Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Today is Tuesday, the 2nd of January, and the first cut to the chase of 2024. The Standard Chartered CIO team wishes you all a very successful year of investing. I'm Daniel Lam, your host for the podcast. I was on leave in the last 2 weeks of 2023, but I did not keep my eyes away from the markets. And indeed, global equities, which we upgraded to overweight in our 2024 annual outlook, ended the year on a strong note. The increasing narrative of a soft landing in the US has been the key driving factor. A potential manufacturing rebound in the US could help the overall economy to avoid a hard landing, at least in the first half of 2024. Inflation is likely to be less of a challenge, and signs of weakness in the economy becoming more prominent, causing the Fed to start a rate-cutting cycle. In terms of regions, we're overweight US equities, as a technology sector rebound and delayed economic slowdown are likely to support corporate earnings this year. We expect potential interest rate cut from the Fed, which lends tailwind to growth stocks, as it alleviates the impact on discounted future earnings. High ROE levels are likely to justify the relatively high valuation premiums, and continued share buyback is likely to support share prices further this year. The other overweight region is Japan equities. Corporate liquidity positions remain strong, with 43% of companies being net cash positive, i.e. with cash exceeding debt, significantly higher than in other developed markets. Further improvements in corporate reform initiatives will likely boost company valuations. Now, a stronger JPY risk is likely to be a headwind to corporate earnings in 2024. So therefore, we believe Japan equity investments should not be on a currency hedge basis. And finally, a few words about Chinese equities. Now, we are neutral Asia ex-Japan and also Chinese equities within. But the moves in the last 2 weeks of 2023 did attract much of my attention when I was traveling in Africa. So much that my family was telling me to get off the iPhone. Now, there was some dramatic move down in one afternoon when the Chinese government discussed about the internet game sector. But the Hang Seng Index eventually found good support near the 16,200 critical support level, and eventually getting some strong buying in the final week of the year. So watch out. There could be some short-term positive momentum ahead for the Hang Seng Index, as technical indicators such as ADX and MACD are showing signs of life. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.